From the library of the New York Stock Exchange at the corner of Wall and Broad Streets in New York City, you're inside the Ice House, our podcast from Intercontinental Exchange on markets, leadership, and vision in global business. The dream drivers that have made the NYSE an indispensable institution of global growth for over 225 years. Each week, we feature stories of those who hatch plans, create jobs, and harness the engine of capitalism. Right here, right now at the NYSE and at ICE's 12 exchanges and 6 clearinghouses around the world. And now welcome inside the Ice House. Here's your host, Josh King of Intercontinental Exchange.
We're just wrapping up those whirlwind weeks that hit the financial markets every 90 days, earnings season, when every public company reports how they're faring and what lies ahead for the coming months. Intercontinental Exchange, just like the other 2,300 companies listed on the New York Stock Exchange, held their earnings call a few weeks ago. The numbers were big. Revenue in the quarter at $1.3 billion. That was up 4% over the last year, with consolidated net income attributable to ICE of $484 million, a profit of nearly $500 million in 90 days. Imagine that. Certainly tough to imagine for Jeff Sprecher, the founder of this outfit back in the late 90s, when he was sleeping on sofas as he plied the country looking for backers for his idea to make power and energy markets more transparent. But with time and success comes challenges every business faces. More employees, more offices, more competitors. How do you stay ahead of all of that? And how do you create a company with core values built to grow and evolve over the long term? That was one of the topics we explored a few weeks ago on this show when Levi Strauss's CFO, Harmit Singh, stopped by on the company's IPO day here at the New York Stock Exchange. Harmit spoke at length about how he partnered with the company's CEO, Chip Bergh, to engineer Levi's turnaround by focusing not just on the balance sheet, but bringing a new culture to the company and laying out a tech-focused strategy for growth going forward. I've often wondered about the role of the CFO, the bottom line focused straight man or woman, keeping the CEO's dreams in check to ensure that when it comes to profit and loss, the L doesn't get ahead of the P. Ever since the passage of Sarbanes-Oxley, it's the CFO's name that has to sign off on the numbers. But a guy like Harmit Singh and Levi's, he came across as much of a creative and a dreamer as anyone on the podium that day. Our guest today, Intercontinental Exchange's CFO, Scott Hill, joined ICE in 2007, not long after that company's November 2005 IPO, to help shape the company's growth and, along the way, bring some Texas swagger to the growing firm. To me, Scott shares with his CFO counterparts like Harmit the same commercial outlook that the best leaders employ: how to listen to your customers, how to give them what they want, and how to get the rest of the company's employees on the same page. As we move rapidly through 2019, there's no better time for ICE's CFO, Scott Hill, to take his seat here inside the Ice House and report on how things are shaking out so far this year and give us a look at what we might expect in the second half. That's right after this.
Now a word from Matthew McRae, CEO of Arlo Technologies, NYSE ticker ARLO.
Arlo is a next-generation smart home company that provides a super simple do-it-yourself home security solution with up to 48% market share and class-leading internet technology. We're looking at new products and even grow internationally. The NYSE obviously has a tremendous history. The way that they actually bring the stock to market, there was a human element that stabilizes the market, and you can see that in the stock opening today. Having a strong partnership to actually bring Arlo as a public company was really important to us. You only get to do this once.
For Scott Hill, the go big mentality has been a constant theme. A native of our nation's largest state in the lower 48, from Longview, Texas, he graduated from UT, cut his longhorns at IBM, and today oversees all aspects of ICE's finance and accounting functions, treasury, tax, audit and controls, business development, human resources, and IR. He also leads ICE's global clearing operations, which, by the way, trading and clearing accounted for 49% of our consolidated revenues of $2.4 billion in 2018. Scott, welcome inside the Ice House.
Thanks, Josh. It's nice to be here.
How's it going?
It's going well.
What brings you to town this week?
Investors bring me to town. We often, after we get done with our earnings calls, we'll go out on the road, Jeff, Ben, Lynn, and I, and talk to our investors, hear what they thought about the quarter, get their reactions, figure out which messages made it through and which ones we need to hit on a little bit more.
You haven't had any of those one-on-ones yet, but you've read a lot of their notes. How did it come through in the first quarter for you?
I was really happy with the ultimate summaries that the analysts put together on the quarter because I do think the messages came through. You know, we had our second best earnings and cash flow quarter ever in the first quarter. And that's in a world that really is more of a soft trading and volume environment. And so, you know, we've consciously constructed our business to have some more annuity-like revenues that provide stability to the company. We've diversified our business, 25% in fixed income, 40% in commodities and rates, 20% in cash equities. And I think the analysts really saw the value of that business diversity that we've consciously constructed over the last 10 or 12 years.
It was a tough day to actually come out. I think the market was a little spooked by what might be going on with negotiations with China and what was happening in Iran. And also, ICE had this pretty precipitous run-up from $74 a share, surpassing $80 before earnings, maybe a little bit of selling on that news.
Yeah, we weren't that far off, but we did announce into a relatively difficult market, and frankly, Thursday and Friday were both difficult days in the market. But as you mentioned, we did have that run-up going into earnings, and I think that was investors looking at the softer trading environment and asking themselves, which are the companies that have taken the actions to protect them in those types of downturns? Which are the ones that we look to that are counter-cyclical? And I think people started to, again, think back that that's the type of company that ICE has constructed. And again, I think you saw it in the results and to a large extent has validated what those investors anticipated going into earnings.
If you look at our peers, thinking back over the last year, there are a couple days over those 12 months when you saw ICE's stock take a little dip, perhaps on news coming out of Washington, D.C. of all places. Does that frustrate you and the team in Atlanta?
It does in the sense that we really can't control the headlines. I mean, we've been a company that's been subject to headlines, pretty much every year since I started 12 years ago. In the early days, it was headlines on the price of oil or hurricanes blowing through that were going to affect the price of natural gas. These days, it's European regulation or something, as you just alluded to, that's coming out of Washington, D.C. Again, though, I think our management team does a really good job of thinking about the long term and not the short term. And so when the headline comes out, we just put our head back down, go back to work, and know that if we deliver the results, ultimately the valuation of the company will reflect it.
Put your head down and go back to work. I'm trying to understand where that ethos might come in a leader like Scott Hill. Longview, Texas, sits in the middle of a triangle between Texarkana on the Arkansas border, Tyler, and Shreveport, Louisiana. I've been to Longview once, brought President Bill Clinton there on September 29th, 1996, got the Kilgore Rangerettes to entertain the crowd before the perennially late president showed up. Classic downtown square. What was it like growing up there?
So Longview is a relatively large town in East Texas, which is to say it's a small town, but big in the area. So we were probably 70,000 people in the town. Our football games on Friday nights, though, would probably have 6,000, 7,000 people in the stands. If you've seen Friday Night Lights, I lived it for a big part of my high school life. My dad was a football coach there. And so all aspects from the coaching part of it to the playing part of it. The thing that you mentioned about the toughness, and you grow up in a small town in East Texas, you work for everything. And if you want to get out of that small town, you have to make sure you put in the effort, you put in the work, because otherwise nobody comes into Longview, Texas and hands you your dreams. You really have to go attack it and go find your dreams. You
mentioned your dad was a coach. I think both of your parents were teachers. You came to ICE knowing very little about clearing and trading. Did having teachers as parents implant a gene for learning and picking up complex concepts with ease? It clearly helped, but I think more than anything else with my parents as teachers, what they effectively taught me was if you don't know something, you can go learn about it. And again, you have to put in the work, you have to make the effort. They also instilled in me a great amount of confidence that, if you're willing to put in that effort, if you're willing to go learn, if you're willing to go take chances and be confident in yourself, the opportunity to succeed will exist. What did you want to be when you grew up?
Right up until I got cut from the University of Texas baseball team my freshman year, I was going to play professional baseball.
Another little fact about a town like Longview, the Big Inch Pipeline began there when it was built in 1942 to support the war effort, sending 261 million barrels of crude to the East Coast during the war. At the time, the longest petroleum pipeline ever built in the world. Let's listen to a newsreel from the time.
Constructing an oil pipeline from the Midwest to eastern points in the United States, engineers are forced to cross many a mighty river. Big Inch, as the line is called, now has another waterway to hurdle. So they plant tons of dynamite to blast a bed for the pipe beneath the river's bottom. Now hold tight and watch for the explosion.
Scott Hill, was there a certain sense of appreciation for what oil could do to win the war and change the world as you grew up, perhaps more than folks on the East Coast can understand?
Yeah, I do. I don't think people consider East Texas a lot generally, but it is actually a birthplace of oil. And until you played the clip, I had never really put it together. The pipeline out of East Texas for me led to the Northeast. There's no question that oil then, and I would argue now, is still the most important commodity that exists. It runs so much, it's so much more. People think about oil and gasoline to drive cars, but oil is critical to a lot of the petrochemicals, plastics that we all use every day. It was fundamental to the success back then. I think it's fundamental to emerging markets today. And as we look for, cleaner alternatives, I see a long-term place for oil in a lot of places in our economy, locally and globally.
So from those Friday night lights and the baseball diamonds of Longview, the next stop is going to be the University of Texas at Austin. Did Austin seem then like the big city when you showed up?
Oh, Austin was definitely the big city. And it's a big university. Even when I was there, it's probably 50,000 people. And so, coming from a small town, and I had a lot of friends that did have this happen, you go to a big place like that and you can get a little bit lost. The key for me was, I guess, number one, I followed my girlfriend, whom I had met in the 8th grade and subsequently married and remained happily married to the University of Texas. And together with her around the sports, we made it small. And by making it small, we were able to benefit from all of the great opportunities that university provides, but at the same time have a really unique experience while we were there.
So John Akers is still the CEO of IBM in 1991 when you traded in your horns, eventually giving way to Lou Gerstner in 1993. Here's an ad that ran on network television around the time you showed up at Big Blue.
IBM is taking the personal computer somewhere it's never been before. Because IBM now brings you a remarkably affordable computer with the power you need to bring work home. Yet it's also so exceedingly easy to use, it even teaches you how to use it. So here at last is a computer for the whole family that's simple to set up and comes right out of the box with so many popular options and software already included. Presenting the IBM PS1, a new kind of computer for the home, the kind you've been waiting for all along. With PS1, IBM brings it all home.
Ah, the PS1. Chart your path, Scott, through IBM for us. It took you to Paris and Tokyo. Your hometowns are getting bigger than Longview or Austin.
Yeah. So, it's funny. When I joined in 91, the PS1, I think, is a really good example. IBM, to some extent, had lost its way and had become really inward focused. John Akers had grown up in IBM, and very smart man, obviously, to rise to the CEO of IBM. But again, a lot of inward-facing culture. We were in the middle of the biggest exercise in finance and accounting when I started was trying to figure out how to implement a transfer pricing system because people didn't work together. People were paid on their own units results. And so it wasn't a focus on IBM, and it wasn't a focus on the customer. That PS1 ad, if you go back and think about it, what they were really advertising was a computer built for a business that they wanted you to put in a home. And so they got outmaneuvered on that. Mr. Gerstner came in, and I had the opportunity to work with him only a little bit, but our careers paralleled each other, albeit at very different levels. And, he was a required and necessary shock to the cultural system. And that's one of the things I think at ICE has made us so successful. And one of the things at IBM that was such a challenge was the culture. And he was able to come in and change a lot about that and get people focused back on the customer, focused on the parts of the business that they were really good at. And at the time, one of the big things was a move towards the services business. IBM's always been in services, maintenance of the computers they sell, et cetera. But at the time, they were starting to outsource the technology management for firms, either on an IBM site or on their own sites. They were also moving more and more into the consulting part of the business. And so I was very fortunate a couple of years in to be given the opportunity to move over into that services part of the business. And, people don't necessarily think of IBM as a particularly fast grower, but in those days, the services business was growing 15, 20% a year every single year. We were innovating for customers. In fact, Ginny Rometty, the current fantastic CEO of IBM, helped really bring the Pricewaterhouse Consulting Group into that services business. And so I had the good opportunity to work my way through the services business. It took me to New Jersey for a year where I worked on site at Lucent Technologies, a company we had outsourced. It enabled me to go to Paris for a couple of years where I looked at the more traditional maintenance and services part of the IBM business. And then over time, as that services experience and the global experience started to pay off, I came back and moved down to Armonk and had an opportunity to work closely with Sam Palmisano and Jenny and many other great executives at IBM. And then finally had the opportunity in 2003 to move over to Japan, which was a fantastic experience as well.
So Paris and Japan and these two experiences that you had, those, we're talking about the move from Longview to Austin, and then I think probably some of your first international forays. What did immersing yourself in an international culture allow you to learn from, grow from, be able to bring that to what would be your next career step?
It's a great question, and you hit the key word, and ultimately it is culture, but because you do in each of the different situations, whether it was a Texas boy moving to the Northeast or somebody from the United States moving to Paris or into Japan, what I found is you really had to take an opportunity to learn about the culture, to learn about the local business practices, to learn about the way things get done. The least successful approach that I saw in all the years I spent overseas was, I'm from the U.S. or I'm from corporate headquarters and I'm here to help. That translated into, you don't have any interest in our local problems and in the way we go about things. You're just here to tell us what to do. And so as opposed to that, I took the time to build relationships, to really learn and understand the way the local business ran, and then work together to try and build teams to deploy those things that I had learned that could help successfully improve a business. And I think understanding the culture, being able to and willing to work more collaboratively with the people on the ground certainly was a life lesson. You look today, I think a couple of those things, the ability to collaborate, the ability to communicate, the importance of culture, all of those things I think have been critically important to the success of ICE over the last 20 plus years. And so I think one of the things that's hopefully allowed me to be successful in this role are the lessons that I learned in some of those international assignments in my IBM days.
Still on some of those lessons from your IBM days, one of the people that you and I have in common is Randy McDonald, who ran human resources at IBM for many, many years. Among the very broad portfolio that you have at ICE is HR. So you can talk about the lessons from people like Sam Palmisano and Lou Gerstner and Mr. Akers, but sort of the titanic functional leaders like Randy McDonald, what are some of the lessons that they left with you, Ginny Rometty and some of your colleagues?
Yeah, so, look, I think the thing with Randy was very focused on people development and the importance of consistently having a deep bench, succession plans, skills development, opportunities to move people around to different business units, to different countries. again, my word's not his, but I think Randy had a view that for IBM to continue to be successful, the HR function was critically important in developing the future leaders. And that's where I had the good fortune to work with Randy, was in some of the development courses that he and his team designed. You asked about Jenny. I had the good fortune to work with Jenny in the services business when IBM, and I don't remember exactly when this was, but sometime probably early 2000, 2001, IBM bought the Pricewaterhouse Consulting Group. This was a time where the regulators were trying to break apart the I think it was the Big Six at the time, and their consulting from their accounting, and IBM bought the consulting. It was a very different culture. It was, a culture of big expensive lunches and every free coffee and free everything else in the office. And at IBM, it was a little, more tied down. And Jenny did a phenomenally good job of merging the cultures. I would say that deal doesn't work without her leadership and with her ability to kind of walk with one foot on the IBM cultural side, but at the same time to understand where those Pricewaterhouse consultants were coming from and their background and their culture that made them successful. It's why IBM wanted to buy them. So she did a really good job. And what I learned there again is take the best of both cultures and don't try and eliminate one, and you'll end up with something better.
So Scott, that brings us now to 2007 and your arrival at Intercontinental Exchange. You had more than 16 years under your belt at IBM. It was the middle of the Palmisano years. Why get off that train and board ICE, then a much smaller concern?
Yeah, so look, there are professional reasons and there are personal reasons. I am a Texas boy. I never quite got used to 6 months of winter in the Northeast, and really was starting to think about trying to get a little closer to home. My parents still live in Texas. My in-laws live in Florida and in Texas at the time. So I was thinking about getting home. Professionally, I could see my career at IBM continuing. I was on a good path, but the reality was I was probably 7 to 9 years away from being considered as a CFO at IBM, and I really wanted it now. At 38 years old, I wanted to go for it now. And so I started to look around for CFO opportunities that would move me a little bit closer to home. And, I tell my son all the time, I'll take lucky versus good, but you have to be good enough to put yourself in a position to be lucky. And I got lucky to stumble across a company called Intercontinental Exchange. A visionary CEO, Jeff Sprecher, who, in the first breakfast where I think we were supposed to meet for an hour, we ended up talking for 3 or 4 hours. And it was clear he had the vision. It was clear that he didn't have a moment's pause for taking a first-time CFO into the role because he valued the experience that I brought more than me having been or not been a CFO. And it just felt like the perfect fit. And it's hard to believe, 12 years have gone past. They've gone by really quickly. It's been a lot of fun.
Did your perspective coming from IBM, which was a technology industry stalwart that was also going to be constantly under attack from people trying to disrupt it, to ICE's startup atmosphere that you're talking about with Jeff, help you understand how to best outperform and eventually acquire or replace the entrenched competitors?
Yeah, so it's funny because I actually looked at it as me having grown up in a growth-oriented part of IBM. And again, if you go back and think about the time, that I was there after the first few years, kind of 95 to 05, the services business was booming. And I loved it. I loved the innovation of it. I loved trying to compete. And I really liked the opportunity where there weren't enough good people to do all the work that needed to be done. And so we were given the opportunity to do more, in an earlier point in our career. And so in looking at ICE, I saw the same opportunity. I knew there was a field there. I knew there were entrenched incumbents, but, it was clear to me that Jeff had a vision on how things could be better. And he sold me on that vision. And again, it was very clear that he was looking for partners to help him go and execute that vision.
You can walk us through some of the major inorganic moves that created what we now know today as ICE. But one of the biggest moves happened 5 years after you arrived, the purchase of this building we're sitting in today, the NYSE, everything inside it and everything connected to it in our data centers, along with what comprised Euronext at the time. Was there anyone who said, this is just too big to swallow, there's too many mouths to feed, it's just, this whole thing is just all too human to be ICE?
Absolutely. I think the biggest concern that we had was ultimately, could we go in and acquire a company that was 3-4 times our size in number of people, and could we align it with our culture? We knew that we could combine the businesses. We knew that we could successfully IPO Euronext, that we could merge technology platforms on the life business. What we didn't know is, could we harness the energy of the great people here and align it with our culture? You know, not too dissimilar to what I suggested I saw in my early days at IBM. You know, I think this company had become a little bit inward focused. I think it had started to take for granted, hey, we're the New York Stock Exchange, of course people will come list here. And it almost seemed like it was viewed as a right. And so, you know, we did worry a bit about that, but again, we thought we had a plan. And I'll tell you, you know, when you come across people like Stacey Cunningham, Lynn Martin, Michael Blaugren, you know, people like that who really got it, their reaction as we came through wasn't, these guys are breaking a lot of glass. It was, finally, somebody's doing that. Somebody said that. Somebody asked that question. Somebody's given me permission to go do what I wanted to do for a long time. And they've empowered me to go out and collaborate with our customers, to innovate on technology. There was, to some degree, there was a bit of self-selection in the people that stayed here. The people that are still leading the NYSE today were the people that saw that vision. And by the way, similar to life, we now have Finbar Hutchison, who joined us with the deal, running ICE Clear Europe. Stuart Williams running the ICE Futures Europe business. So a lot of really good leaders that just needed to really be set free to go and drive the business. And that's what they're doing today.
You mentioned Stuart, you mentioned Finbar. Tell me about the ICE that's been built since then. The ICE built on the economy's insatiable appetite for data and the network that it represents.
Yeah, so you know, the reality is, we've always been in the data business. You know, when I started 12 years ago, about 12 to 15% of our revenue was in data. But to a large extent, we ineloquently talked about it as the exhaust off the trading.
I remember Jeff saying that many times.
Yeah, and you know, what I don't think we quite appreciated at the time is that exhaust actually informed the next trade.
Yeah.
Because it let people know where price was, it let them know depth of book, it let them know all the things they needed to know to manage the risk that they were trying to manage. And, you know, I really think as we made the NYSE acquisition, that's really where that point started to get driven home even further. Because at that point, we went from kind of 12 to 15% of our revenues to around 25%. And you know, really good business here at the New York Stock Exchange in the ETF space. It was very clear that that's where the industry was headed, and that's based on data. You build an ETF with the data of the constituents that are a part of that ETF. And, you know, I also think it gets back to a little bit of what does that data really represent? And as we looked around at the next market, you know, we had transformed energy markets, we had transformed CDS markets. As we looked around, you know, the next market, whether it was an ETF or electronic trading that really appeared poised for an analog to digital shift, was fixed income. And we could have come at it through our traditional means, which is, hey, we've got a trading platform, we've got a clearinghouse, you know, let's launch trading of fixed income. But we stepped back and asked ourselves, you know, where does price discovery happen for bonds today? And the reality was that price discovery happened at IDC, where Interactive Data Corp, that was the business we acquired in 2015. And we talked a lot about that being the acquisition of data, and it did push data to being more than 50%. But that deal was really about acquiring a business where the price discovery for fixed income occurred. 2.7 million securities that we price, 13 million securities where we sell reference data. And as you look at a market that is in the process of going from analog to digital, we're starting at it, yes, from a data standpoint, but really from a price discovery standpoint. And we think the relationships that built up with our institutional customers, along with the product knowledge, will enable us to now take BondPoint and TMC and our CreditX bond business and really put that together to drive the electronification of the bond trading market.
So after all that, Scott Hill, here we are in 2019. Every CEO and CFO have a secret in how they handle earnings calls. A company that I once worked for would record their statements days in advance, and then when the time came for the call, they'd just sit back and press play. How do you prep for a call?
So what you described was I had a lot of experience working at IBM, and that's how it ran. We would record the comments. Mark Lockwood, just CFO when I was there. We'd record them. We'd listen to them. We'd say, oh, you sounded sad there or too happy, and he'd have to go back and edit it. And it was a process. And then, just as you said, we'd push the button and we'd sit back for 20 minutes and wait for the Q&A to start. You know, I think it worked. You know, Mark did a great job. John Joyce before him did a great job. And it still, you know, is run by Patricia Murphy, who is a fantastic IR executive. And so it's still working for them. But ours is, I guess, as true as a lot of things at ICE, ours is a little less formal than that. We typically, a week or so before the call, we'll take a look at a script for our opening remarks. We record our opening remarks as well. Jeff will typically take his portion of it, and I will take mine, and we'll, if you will, put the language into our own words, our own voice. And then we'll get together in a room with some of our colleagues, and we'll read it, and we'll get their feedback on it. We'll go back away for a couple of days and tinker with it a little bit more. We get together, we sit in a room, and it's usually the day before earnings. We read it again and go through one session on Q&A. Hey, what questions do we think are coming? You know, who's going to answer which questions? What are the key messages that we want to make sure we get out? And then, you know, we show up the next morning. We turn on the call. We read our scripted remarks, and then we sit back and do the Q&A and figure out what our investors want to know and hopefully give them good answers to the questions.
Some of that Q&A for the first quarter, when the analysts piped up and they were queued up and you took them one by one, a lot of them focused on softer volumes seen across the industry. Why is that in your view?
Well, it's still half our business. I think you mentioned earlier in the session about 49% of our business is our trading and clearing business, so it matters. And so it's also the most transparent part of our business. If you want to know how that half of our business is doing, you can know today, and you can know tomorrow, and you can know the day after that, because all of our volumes are out for the world to see every single day. And so it's an easy part to track. And again, it is a higher incremental margin business, and so those revenue dollars are a big driver of cash and earnings, and so appropriately a focus. You know, I think there was also a lot of focus because people are looking at the diversity of the products that trade on ICE. And I mean diversity of products, but also geographic diversity. And so if you think about it, we're not U.S. oil, we're global oil. And that could be Brent, it could be Dubai, it could be any of the 500 products that hang off of Brent, it could be diffs between Brent and WTI. We're natural gas, but we're not just U.S. natural gas. We're TTF in the Netherlands, and we're NBP and the other hubs. You know, frankly, TTF is slowly but surely becoming really a global benchmark as natural gas globalizes. We are the European emissions market. And really, I think one of the things the analysts were trying to understand is how can you be in a quarter where volumes are down 12% and yet your energy revenues are roughly flat? And it's really the diversity of the business that we have that distinguished us. And again, that really came out in the summary analysis the summary reports that the analysts put out the day after the earnings. They saw the value of that diversity in our volume-based business. So even in a softer volume environment, we were able to generate better than typical results.
I want to quote Jeff Sprecher directly from what he said on the earnings call. He said, "Our first quarter performance demonstrated the strength of our model, highlighting the inherent value of a diverse and balanced business mix." As you were just saying, Scott, despite softer volumes, Jeff goes on, across our industry, we grew revenue, earnings per share, and free cash flow, and we returned nearly $600 million in capital to shareholders. I want to hone in on that phrase, just again, a diverse and balanced business mix. Take me back 10 years or so to 2009, right in the middle of the financial crisis. Could ICE have made the same claim back then?
We were building our way there, but absolutely not in those years. Because if you go back then, I mean, we had bought the New York Board of Trade in 2007, which had diversified us from energy to energy and ags and a little bit on the financial side. We had completed our acquisition of CreditX, which for some people was a bit of a head scratcher. Why is ICE an electronic trading and clearing platform? Why are they buying a voice broker? But what we were really buying was the product expertise, because we saw a world where our clearing capabilities, we thought, could bring necessary transparency to the CDS market. And frankly, that market needed it if it was to survive. And now we're the largest provider of CDS clearing services in the world. But to some extent, that's, it was energy, it was ags, it was trading and clearing, it was moving towards clearing and CDS. But, not what we are today. I've heard the phrase, you never step in the same river twice. I would argue I haven't come to work at the same company 2 years in a row in the 12 years I've worked here, because, again, energy and ags and then CDS and then interest rates and the New York Stock Exchange and then the big push into data. So no, we back in 08, 09, we're definitely not able to point to the diversity that we can today. And again, I think it's important that people understand that was a conscious effort. This is a business that we consciously constructed to be diverse and to really demonstrate the stable revenue, the stable earnings, the consistent growth of earnings and cash flow that you saw in our first quarter results, that you saw in our 2018 results.
At the end of the CEO's opening comments, Scott, it's usually a bunch of platitudes before the rough and tumble of the questions come in from the analysts. But this quarter, something Jeff said caught my ear. He said, our integrated platform enables us to drive efficiencies across our technology and operations. What's the secret sauce here? A lot of asset classes under one roof?
Well, a lot of asset classes that run on an integrated technology platform. The reality is we operate multiple exchanges and multiple clearinghouses around the world, and they run on one technology. And so that generates a lot of efficiency. It allows for not just efficiency of the obvious, of the technology and the resources that support it, but it's efficiency of process. It's efficiency of aligned policy. It's not dissimilar. The New York Stock Exchange, we're rolling out Pillar, a single technology that will allow us to run all of our equity and options exchanges eventually on a single technology platform. And so when an upgrade needs to happen, it happens once. When a change needs to be made, it's changed once. And this is the history of ICE, running single technology platforms, supporting multiple exchanges and multiple clearinghouses.
After the break, Scott Hill and I continue our conversation about the assets and data around them that drive the modern economy and what we can expect for the remainder of 2019. That's right after this.
Now a word from Kushin Kar Shun Pang, CEO of Tencent Music Entertainment Group, NYSE ticker TME.
Tencent Music Entertainment Group is the largest online music entertainment group in China. We operate the 4 largest online music apps, including the social entertainment part. We are serving more than 800 million users. The user experience on TME platform is extremely great. I look forward to have a long-term partnership with New York Stock Exchange. Tencent Music Entertainment Group is now listed on New York Stock Exchange.
Back now with Scott Hill, the Chief Financial Officer of Intercontinental Exchange. Before the break, Scott and I were tracking his journey from Longview, Texas, and it is a long way from Longview. As I mentioned in the intro in the first part of the show, you oversee ICE's clearing operations. Helping to generate $2.4 billion is no small feat, but looking at the bigger picture, how does the trading and clearing segment of ICE complement the data business and vice versa?
So the clearing business is particularly important for our futures and options business because, at the end of the day, if you and I trade a stock, we're going to largely settle it, not clear it, because you want the stock, I want the cash, we make that trade, you get the stock, I get the cash. Our futures markets are really about managing the risk in the future. And so, when I fly Delta to New York, which I frequently do, I want to book the ticket out in time to get the best price. The way that Paul Jacobson, the CFO at Delta, can price that ticket is by locking in the cost of oil, which is, that's a large part of their overall cost. And to the extent he can create stability in that important cost factor, he can more confidently price my ticket. And so largely customers that are managing risk out in time need to ensure that, hey, if I bought oil 6 months from now, somebody's going to show up with oil. Or if I, paid for that somebody's going to show up with the cash. And that's what clearing really does. It steps into the middle of that trade, and it ensures each counterparty that there will be oil or there will be cash at the time that they're supposed to be. And so it's really fundamental to the operation of the futures and options markets that we run. But those clearinghouses can't mark a single position without a really important data point every day, and that's price. Because the day that you and I, if we did a trade 6 months from now, the price was X. The next day, it's something different than X. And 2 weeks from now, it's something different than that. And so that price, that data moves. And so it's critically important for the clearinghouse to have that data point to mark the position. That clearinghouse has to, when it steps into the middle of the trade, it collateralizes what it sees as the risk of that trade. And so from each counterparty, it says, hey, look, based on our statistical models, the risk of your position creates X dollars worth of risk that I need to collateralize from you. Those risk models are all based on data. They all have to be back tested when they're reviewed by regulators and our customers. And so it's vitally important that we have accurate data to feed into our risk models, because the old adage, garbage in, garbage out, is 100% true. And when you're running a risk model for clearinghouses that clear billions of dollars, you can't afford garbage in. And that's fundamentally data. And so it's data that feeds the clearing model. And those prices at the clearinghouse also create data that, as I said earlier, then inform that next risk management trade that our customers may want to make.
Some big news from ICE clocked in just as the quarter announcement was about to go out. It was hot off the presses. ICE wrote a check for $345 million to acquire a Utah-based company called Simplifile. What's Simplifile, Scott?
Yeah, so at its simplest, no pun intended, form, Simplifile is a network throughout the United States that allows mortgage documents to be filed in local counties. So you can think about it, the next time you write a mortgage, as you sign that mortgage, those documents are going to need to show up in a county office somewhere, so that it's on file that Josh King has a mortgage on this house in this property. And probably, you think of all the documents you do around a mortgage, a credit check, a title document, et cetera. And so Simplifile is the plumbing into counties that represent 80% of the population in the United States. And I think what you see with it is not dissimilar to what you saw when we finalized the acquisition of MERS towards the end of 2018. Again, it's a little bit different in that MERS is the database where 75% of the mortgages in the United States are registered. But in each of those instances, it's the plumbing of a market that today is very analog in a world that's very digital. And so we believe that there is an opportunity. Simplifile had this vision. At MERS, we came in and rebuilt that database. We believe that by positioning ourselves in the plumbing, we can, and the connectivity, by the way, in that plumbing to thousands of title agents and lawyers and servicing agents and mortgage companies, that through that plumbing with that customer connectivity, we can help a still relatively inefficient market become more efficient. And
it seems like a playbook we've seen before from this company.
It is our playbook. I mean, it's what Jeff and Chuck Weiss did when they started ICE 20 years ago in the energy markets. Jeff was looking for a place to buy and sell his power, not to start up a trading exchange, but he looked at it and thought, this is crazy. That we're moving to a world where this is going to happen on a screen, and there's not a screen. And so he built the screen. And, I talked earlier about the CDS business where, I can remember in 2008 watching, CNBC and people running around with their hair on fire thinking the world was going to end because of something nobody had ever heard of called CDS. And the reality was the CDS wasn't the problem. The lack of transparency was. And so we came in and we transformed that market with clearing. And I mentioned earlier fixed income. Again, we're looking at a market going analog to digital. We made a big bet with IDC back in 2015, and now last year $1 billion on 2 trading platforms to really facilitate that. Simplifile and MERS are the beginning of a similar strategy in the mortgage space, and it is a playbook that we've run well and run successfully.
I mean, you mentioned fixed income. Those 2 companies were BondPoint and TMC Bonds. And yet there had not been much written about it or talked about the electronification of the fixed income space. Is the world just waking up to the fact that the corporate and municipal bond space is still somewhat stuck in the 1990s, ready to leave the telephone behind and get fully electronified?
I think there's some truth to that. I also think there's a large element of some of the capital changes that happened after the crisis. You know, back prior to that, a lot of the large banks and financial institutions would carry fairly large inventory of bonds. And so if you wanted to make an investment, you could turn to those players and you could make that investment. In a world where those institutions are more capital constrained, they hold less inventory, they still participate, but to a lesser extent. And I think particularly on the smaller size trades, they're looking for a more efficient way to facilitate investments in fixed income. And that's where I think TMC, particularly in the muni space and BondPoint and Corp as well, really will help us really enable the transformation in that market that's already occurring.
Scott, you've been one of those CFOs who isn't content to just keep the books, account for the profit and loss, and watch over the treasury. You also run a part of the business, as we've been talking about. A big part, in fact. You had our clearing business. Why take on duties in addition to already a very large role as chief financial officer?
So when I joined ICE in 2007, we were coming off $150 million of revenue, probably had 300 people, give or take a little bit. And I was leaving IBM that, I don't remember, but probably had done 90 to $100 billion of revenue and had 300,000 people. And I can remember my wife, Hillary, looking at me and saying, what I worry about is you're going to be bored in 2 years. 12 years later, I'd actually take a couple of days of boredom. It's been a phenomenal ride. And you know, one of the things that I think distinguishes ICE is not a single one of our senior leadership does only one thing. Mm-hmm. All of us wear multiple hats. And so when Jeff came to me in 2008, and said, hey, we're building ICE Clear Europe in London, the first new clearinghouse in 100 years. We just bought a clearinghouse and with the New York Board of Trade acquisition. You know, Scott, you're leading the deal on CreditX, and we're going to build a CDS clearinghouse. We need somebody to oversee all that. What do you think? And I'm like, I'm in. Absolutely. As you alluded to earlier, I knew absolutely nothing about it at the time. But as my mom and dad taught me, if you're willing to learn, that you can figure it out. And over time, thanks to a lot of really smart colleagues who did get the business implicitly and were able to run the clearinghouses, it's been a lot of fun. And so there, never a moment's hesitation. And in fact, I would tell you that one of the many things that I'm most appreciative of Jeff is that he gave me that opportunity, an opportunity to be more than just the CFO of the company. Very proud to be our CFO, but also very proud to be associated with our world-class clearing operation.
Over the 20 years of the company's history, it's become actually quite a big company. How does the culture change over that time, but also try to stay faithful to Jeff's original entrepreneurial mindset when the headcount goes from 100 folks to over 6,000?
Yeah, it's all about maintaining the culture. And the reason that we've continued to be successful is because we continue to focus on customers and solving their problems. We continue to collaborate. We continue to clearly communicate, and we work as a team. And those may sound a little bit like buzzwords, but when we develop the core competencies, if you will, of our company, there's no third party that we brought in to do that. Chuck and Jeff and Mark Wassersug and David Pennickett and David Goon and many of the people that originally started, I sat in a room and said, how did we get here? What made us successful? And we wrote it down. And so that was an important step, but more importantly, because I remember one of the things that Lou Gerstner said early days when he was trying to figure out the IBM culture was, I can sit here and I can tell you what the culture is, but if that's not what you see, it's not what it is. And so more importantly than writing it down, I think what's allowed that culture to continue is a senior leadership team whom you see in everything they do and every act they take. It's guided by those core principles. And so I like to think that our employees on balance see that culture every day when they come to work. And importantly, we're a very flat organization. So if they don't see it, It's there more times than I can count where I've had somebody show up in my office and say, "Hey, you say this, I'm not seeing it. We need to work on it." Same thing with Jeff and Chuck and so Stacy here at the New York Stock Exchange, and so it really is that we continue to focus on the culture that's made us successful, but most importantly, we continue to live it and we expect it of ourselves and our colleagues.
Let's wind our conversation down, Scott, to the point at which it began, back in Texas. You've watched the Texas Longhorns go from national champions in 2005 under Mac Brown through some really tough years, but now with Coach Tom Herman, they're poised to open this season in the AP Top 10. Let's hear a little of Coach Herman's philosophy.
If we're going to tell our players all the time that the single greatest motivating power in the world is love, and that we're going to have it spread throughout our team, and I'm going to sit in a living room and tell a parent or tell a recruit, I'm going to treat your player like my son, then I'm going to treat your player or this player like my son. And I hug my sons, I kiss my sons, I tell them I love them. I also punish my sons. There's also a lot of tough love that goes on in my house. But
from Coach Herman, tough love, the good and the bad, but ultimately it comes down to communication. What have you seen as the keys to the revival of the Texas program?
I listened to that segment, and I've listened to Coach Herman on a number of other occasions, and again, it goes back to culture. It's a culture of accountability. You heard him say it right there. I'm gonna reward you when it goes right, and I'm gonna punish you when it doesn't go right. But I'm gonna expect you to do the right things the right way, and that's culture. It's a culture of toughness. You hear him talk about it all the time. We're gonna be tougher, and we're gonna be in better shape than the people on the other side of the ball. And it's I'm not, as a coach, going to be the only one that can hold the team accountable. I need every teammate to hold every other teammate accountable to that culture. And look, I don't think at the end of the day it's any great secret. I think great organizations have great culture and have high expectations and expect to win, know how to win, know how to learn from defeats, and don't like the taste of that defeat and resolve never to let it happen again. And I think that's what Coach Herman has brought back to the University of Texas.
Your favorite book is by Ayan Rand. John Allison, the former CEO of BB&T, that's NYSE ticker symbol BBT, also felt her philosophy was important for anyone in business to reflect on. Let's hear from John Allison.
One of the most powerful aspects of Rand's philosophy is that it is fully integrated. She starts with understanding the nature of reality, man's means and knowledge, and the kind of ethics that are appropriate to an independent thinking being. We talk about people having integrity, but if you don't have integrated principles, you can't have integrity. If you have inconsistent beliefs, you can't operate consistently with inconsistent beliefs. And Rand's philosophy is a fully integrated system. The second most powerful attribute that the philosophy has is it works in the real world. and a lot of people hold beliefs that don't work in the real world, so they can't live consistent with those beliefs. So she has a real world philosophy that's fully integrated, which is a very powerful competitive advantage in life.
We've talked a little bit about the philosophy of Coach Tom Herman, now the philosophy of Coach Ayan Rand. What are the benefits of her teachings to a business's success?
So, from my standpoint, in an overly simplistic manner, what I've always read her to say is, as an individual, you have a responsibility to go out and do the most you can with the talents that you've been blessed with. And that you have the integrity, as was mentioned in that set of remarks, not to need somebody to force you, if you will, to do the right thing, to maximize your contributions, to maximize the use of your ability. And that's what makes, to me, great business. We don't succeed. Jeff's a great CEO, and he and Chuck are great founders of this company, but they're not good enough that if the people that worked at ICE weren't all fantastic individuals, it wouldn't work. And we couldn't do it at 300. We certainly can't do it at 5,000 or 6,000 people. We can't go and make sure every day that every person is doing the right thing, that they're focused on customers and they're working well with their colleagues. We have to trust that they have the integrity and that they're maximizing their individual talents. People are good at different things, but everybody's good at something. And so figure out what you're good at and go and use those talents to make our company better, to make our country better. Again, simplistically, I think that to me was what she always said.
How did you come face to face with Rand for the first time?
Actually, I came face to face. One of my first managers at IBM recommended the book to me. And it really struck me at the time, because again, I was young, I was motivated, and what it said to me is, if you're willing to go out and work hard and to use the talents that God's blessed you with, you can be successful. But don't look for somebody else to necessarily give you the opportunity. Go get the opportunity. Don't look for someone else to come in and tell you what you should do. Go in and figure out what it is you want to do. And again, figure out what you're willing to do, figure out what you're good at, and go leverage those talents to their maximum ability.
At a JP Morgan investor conference last fall, you told analyst Ken Worthington that when you started at ICE, your son was in 5th grade. He's now a senior in college. I wonder at what point he's going to read Rand if he hasn't already. And are you ready for the graduation ceremonies?
Yeah, so I am and I'm not. Jacob is, as you said, 5th grade when I started, graduating from William and Mary, 2nd week of May. It's a bit bittersweet, I guess is the way to put it. He's a great kid. He's done well at university, and he's ready to move on. But, recently I was in the process of taking some stuff out of the house to move to his new location in Washington, D.C., and it hit me that I was moving him out. And so, Jacob was with us in France, and he was with us in Tokyo, and so I'm ready. I'm ready for him, I guess is the right way to say it, because he's ready, but I'm a little less ready for me. The good news is I've got a wonderful 16-year-old daughter who keeps me on my toes. Sophie's a great athlete, and there's nothing I love more than watching her play. So she'll help Hillary and me with the transition, but it's Jacob's time. He's ready, and he deserves what's in front of him, but it'll be hard to let him go.
So Scott, as we wrap up, ICE and you are at a different stage in life. Your son was still in elementary school when you came aboard, but he's now preparing to graduate college. Is ICE now a mature company, or do you still view it as a startup through the lens that you saw it in the first time?
We're a more mature company, but we still have a lot of opportunity to grow and serve our markets and our customers. And I think that's been one of the things that's always distinguished ICE is every single quarter, we deliver strong results. Every single year since we've been a public company, we've grown earnings. The earnings in the current year were bigger than the earnings in the prior year. It's the chart that Jeff ends on every single earnings call is the demonstration of that success. But that success comes because while we're delivering in the quarter, we're building on the future. We're building in the fixed income space to help that market move analog to digital. We're investing in the mortgage space as that inefficient market needs to become more efficient, needs to move from analog to digital. We're investing in Bakkt to bring trading and clearing and custodial services to the cryptocurrency world. And I think that's a distinguishing factor of ICE is as we deliver in the current quarter, as we deliver in the current year, inside our expense is a lot of investment that's about growth 2 years out, 3 years out, 5 years out. And I think there's a lot of room to run. And again, it's one of the reasons why, 12 years ago, my wife said, you're going to be bored in 2 years. 12 years later, I can't wait for the next 10.
You are certainly not bored, Scott Hill. Thanks a lot for joining us in the Ice House. Best of luck for the rest of the first half and the rest of the year.
Thanks, Josh.
That's our conversation for this week. Our guest was Scott Hill, Chief Financial Officer of Intercontinental Exchange. If you like what you heard, please rate us on iTunes so other folks know where to find us. And if you've got a comment or a question you'd like one of our experts to tackle on a future show, email us at icehouse@theice.com or tweet at us at Icehouse Podcast. Our show is produced by Teresa DeLuca and Pete Ash, with production assistance from Ken Abel and Ian Wolfe. I'm Josh King, your host, signing off from the library of the New York Stock Exchange. Thanks for listening, and I'll talk to you next week.
Information contained in this podcast was obtained in part from publicly available sources and not independently verified. Neither ICE nor its affiliates make any representations or warranties, express or implied, as to the accuracy or completeness of the information and do not sponsor, approve, or endorse any of the content herein, all of which is presented solely for informational and educational purposes. Nothing herein constitutes an offer to sell, a solicitation of an offer to buy any security, or a recommendation of any security or trading practice. Some portions of the preceding conversation may have been edited for the purpose of length or clarity.